All right, let's dive into something huge happening in Nigeria. We're talking about a massive, top-to-bottom overhaul of the entire tax system, and it's all set to kick in from 2026. This is a really big deal, and trust me, it's going to affect pretty much everyone, from you and me to the biggest companies out there. So let's break down the 5 things you absolutely need to know.
And just to give you a sense of the scale here, this isn't some minor tweak. We're looking at the most significant shakeup of the country's tax system in over a quarter of a century. It's a fundamental shift, you know? The whole idea is to modernize, to simplify, and to get Nigeria in sync with global standards. So, what exactly is changing?
We've broken this down into 5 key areas for you. First, we'll look at just how sweeping this overhaul really is. Then, we'll get into what it means for individual taxpayers, your payslip. After that, the new deal for businesses. Fourth, how the whole system is being modernized. And finally, how Nigeria is aligning with the rest of the world on tax.
Okay, first up, the sheer scale of this thing. The goal here is pretty ambitious. It's to move from what was, let's be honest, a complex, kind of confusing collection of old laws to a much more streamlined and modern framework.
And this slide really paints the picture, doesn't it? The old system was this patchwork of more than a dozen different acts, CITA, PITA, you name it, and navigating all of that could be a real headache. Well, all of that is being condensed into just 4 new comprehensive laws. The whole point here is just making the entire tax structure easier for everyone to understand and to deal with.
Now, let's bring it down to the personal level. Forget the big picture for a second. How is all of this actually going to affect your wallet and what you see on your payslip every month?
Well, the first major change is some serious relief for low-income earners. A brand new tax-free threshold has been created. So, if you make 800,000 naira a year or less, you will now pay absolutely 0 income tax. That's a huge change.
And here are the new progressive tax brackets. As you can see, the rates go up as your income goes up. Now, yeah, the highest earners are going to face a steeper rate. It peaks at 25%. But the interesting thing is that a lot of people in the middle income range will actually see their tax rates go down compared to the old system.
But, and this is a really big but, here's a massive change that impacts everyone. The old Consolidated Relief Allowance, the CRA, that standard deduction everyone got, it's been completely abolished, gone. This is a fundamental shift in how your taxable income is even calculated.
So what's replacing it? Something new called rent relief. How it works is, you get a deduction that's either 500,000 naira or 20% of your annual rent, whichever one is lower. Now, what this means is that for a lot of taxpayers, especially if you have low rent or you own your home, this new relief might actually be a lot less than what you used to get under the old CRA.
Okay, let's pivot and talk about the business world. What does this new tax act mean for companies, from the smallest startups all the way up to the big established corporations?
This is a big one, the old minimum tax rule, which was always pretty controversial. I mean, companies had to pay tax even if they weren't making a profit. That has been totally scrapped. This is a major win for businesses, especially those just starting out or going through a tough time.
And there's more good news, especially for small businesses. The government is raising the bar for who qualifies for a tax exemption. Now, if your company's annual turnover is 100 million naira or less, and your fixed assets are under 250 million naira, you'll be exempt from federal taxes like the company's income tax.
It's not all tax cuts for businesses, though. The capital gains tax for companies has, well, it's tripled. It's jumping from 10% all the way up to 30%. That is a dramatic increase that's really going to have an impact when companies sell off assets.
And one last thing for businesses, in another move towards simplification, several different levies are being rolled into a single new development levy. It's a 4% tax on assessable profits, and it replaces things like the old tertiary education tax. The goal is to make compliance easier by just having one payment instead of many.
So, beyond just the rates and the rules, the new act is bringing in some really crucial administrative changes. This is all about dragging the system into the 21st century to make it more compliant, more transparent, and hopefully more fair.
And wow, there's a lot going on here. A new tax ombuds office is being set up to handle taxpayer complaints, which gives people an independent place to go with disputes. VAT is going fully digital with mandatory e-invoicing, and in a big plus for businesses, they can now recover input VAT on services and fixed assets. Consumers get a win too, with more things like food and medicine getting 0 rated for VAT. But And here's the catch. With these benefits come much stricter enforcement and way higher penalties for not complying.
Okay, for our final point, let's zoom out and look at the international stage. A really key driver behind all of these reforms is to get Nigeria's tax policies aligned with what's happening around the globe.
To do that, Nigeria is officially adopting the 15% global minimum tax for multinational corporations. This brings the country in line with this big international agreement, the OECD's Pillar 2 framework. It's basically a global effort to make sure massive multinational companies pay a fair share of tax no matter where they operate, and it stops them from just shifting profits to countries with super low taxes.
So, that was a lot to take in. Let's do a super quick recap. First, this is a massive overhaul, turning dozens of old laws into just 4 new ones. Second, for individuals, we've got new tax brackets and rent relief, but say goodbye to the CRA. Third, for businesses, the minimum tax is gone and small business exemptions are up, but capital gains tax is tripled. Fourth, the system is being modernized with a tax ombuds, digital VAT, and tougher penalties. And fifth, Nigeria is getting in step with the world by adopting that 15% global minimum tax.
And all of this brings us to the final, critical question. The framework is in place for one of the biggest reforms in Nigeria's recent history. The laws are passed, but will it actually work? Its success is going to depend entirely on effective implementation, on having the administrative capacity, on being transparent, and on getting both businesses and citizens to buy into this new tax landscape. The real work, you could say, is just beginning.